Hello everyone, this is Ryan Mallory for SharePlanner.com. Today is July 17th, 2012, and I thought I'd do like a market vid, go over some more of the popular stocks out there, and also just go over some of the trades that I've made of late. So I do an evening tape every night, and instead of having like a chart of the day, we'll make this that substitute for tonight. I don't do video recaps every night. I probably should do them more often, but nonetheless, that's what I'll be using this video tonight for. Go ahead, just start off with the S&P. You can see I marked the dickens out of these things. Lots of lines, lots of things to track. We can go ahead and delete that line just for making it a little bit clearer. Broke above the 10-day moving average. Today it didn't feel like a really strong up day because it was quite choppy in the very beginning. Just by looking at the 5-minute moving average, we did gap up, but as soon as we gapped up this morning, tanked right off the bat, and then just steadily moved higher throughout the day. The big move happened off of the lows of the day onward to where we hit the highs. After we hit the highs, we had one more move higher, and then it was just sideways consolidation the rest of the day. But it was a good solid move. I mean, we're up 10 points. And anytime you're up more than 10 points, I mean, bulls should rejoice. So it just didn't quite feel like that. Not like what we saw, say, back on the 29th of June, where we just rocketed 30 plus points higher. So it was a much quieter day per se. I'm really, from the bullish standpoint, I do remain bullish on this market. We need to break through this 1374 level. Once we do that, there will be much, and not just break through it, but close above it. I don't care about the shadows being above, the shadows of the candles being above 1374. Instead, we need to actually push beyond it. So that's an absolute necessity, in my opinion, for us forming a higher high in this market. But I read a lot of blogs, people saying, we're going lower. My economic outlook on the market's actually bearish. I would love to short everything because it would line up with what I believe. But like you hear me constantly say, don't trade what you think, trade what you see. I've constantly been a believer in that. And in this market, what do we have? We have higher highs marked here and here, and then we also have higher lows marked here, here, and here. So there's no reason to get short at this point. I think it's foolish, quite honestly. So, I mean, you may be right, but wait for some kind of confirmation. And with confirmation, I'd like to see us break below 1306. That's been my theory the whole time. Once we get below this 1306 level, and that means a close below it, then I would get bearish. But now we're starting to distance ourselves off of this recent higher low. So one could say that, let's say we were to make a move lower off of this move that we made today. Let's say we go from here down to here, and then we just keep on trucking lower. Then what you would have would be a lower high created by a new lower low. So at that point you could get bearish too. So in tomorrow's trading plan, you probably will see the 1306 that I've constantly been mentioning probably for the better part of a month now be taken out of the trading plan, and instead a low or a close below 1325 would be a new reason to get bearish at that point. So less room to work with for the S&P 500, but I mean, you're still talking about a good 40 points or so. And we're not anywhere near oversold in a short term. Longer term, we are. If you look at the SharePlanner reversal indicator that I post, and I put a link to it in this morning's trading plan, you'll see that we are at those extremes. Doesn't mean that we can't go higher. It's just that you need to start being cautious, not get too top heavy in your portfolio, start tightening up those gains, like I did in CMG today. And CMG, you know, it was like a rock and a hard fight. I vividly remember this unbelievable trend that it rode up on the 10-day moving average earlier this year. And so when it's basing here and breaks out, you know, you start thinking, I wonder if we're like at this point in a new rally here, and we're just going to start, making this incredible move. But that's difficult to say. And what I was staring at here was an inability 2 days in a row to break above its 50-day moving average, and also a ton of resistance right in here. It's not just one price level. It's like 14.17 all the way down to 392. So the chances, and remind you too, I've been holding this thing for 2 weeks. I held it ever since it came all the way down here. So, tested the trend line. So I've been pretty patient for, about 13 trading days on this sucker. And I don't think it's just going to go straight through this whole resistance level. So I took the gains. I felt like I was in the middle of that range. Took them at like $400.39 a share. I also took some half a position off yesterday at $395. So, $397 I got out at. I made about $20 per share on the trade. It's a high dollar stock, so obviously that reduces your gains, but the percentage is still the same. So I made about over 5% on that particular trade. Not bad. It did take 13 days, but I'm still happy about it. Sometimes 5% takes 13 days. Sometimes it takes intraday session. It depends on a lot of the high beta, how much volatility it has in the stock and so forth. But this was a pretty nice gain. I'm just as happy with this as any. But back to the indices here. You'll see the Nasdaq. It's trending higher, making a nice series of higher highs, higher lows. Boom, and I can't believe I just said boom. And there you go, another one right there. Nice channel working off of. Needs to break through that 10-day moving average, unlike the S&P that's already broken through that. Or did it? I know it's been struggling with it. Yeah, I broke through it today. All right, just had to make sure there. Dow Jones not looking as great as the S&P. You have a different trend line to follow off of. It's a little steeper here, and one could make the claim that you are forming a bearish wedge right there in the Dow. Very good chance. Not saying that it can't happen, but at least there it's above the 10-day moving average, above all the other major moving averages. And you also have another trend line here that's worth pointing out, that if you take this one away, take that little random line away as well, what do you have? You have a channel that's moving upward. It's just not moving as bullish per se. So let's look at gold. Here with gold, you have this thing's holding on for dear life, to be honest. People ask me a lot about gold, friends and family in particular, because they see all those blasted gold commercials on radio and TV, and so it's easy to think that you're missing out on the action. I think that there's probably a day of reckoning for gold here. I think it's going to flush out a lot of these people who have been buying, from back in April of last year to, the highs of last year in September. I think if it drops below 151, you could see a nice wave of selling, maybe push it all the way down into the 130s on GLD. So if it breaks through, this 128 level, who knows how far it can go. And worth mentioning too, you got a downward channel here, off of the September highs of last year that it's been trading in. So a break lower would definitely warrant, a move down to 137-ish. Let's look at silver here. Still similar downtrend. That if it breaks, if silver breaks below 25.75, and this is SLV, it's not the actual silver contract, but they're pretty similar in price. If it breaks below that, then I would definitely say you're going to be seeing possibly 21, if not lower. So, and I tell you what, there is a lot of people on this run up here that are bleeding through the nose on this particular ETF. So I can't imagine them wanting to hold on much longer, especially if they really loaded up and thinking that the world was coming to an end, that we break through that 25.75 level, that they're going to keep holding longer. And Urban, here's this trade, and I want to highlight it because it's important to highlight losers as well on your trading. And I made this actually part of the daily long and short today. I was resurrecting an old feature of SharePlanner that a lot of people have been asking me about, so I started it back up. But you have these like little peaks that this thing has made over the last year or so, and when it makes these isolated peaks, it tends to sell off right afterwards. In fact, the next day it's greeted by a gap lower. So I got in at like 29.80 and it just went right through it at 30.50 was my stop. I thought it would come back down. It didn't, just like it did on these previous days where it peaked higher. So it was also used as a mechanism, as a hedge, because we were selling off earlier this morning. So I wanted to keep have something there if the market started getting ugly and nasty, that something would make some money for me. But as you can see here, that this thing just kept going up with the whole market today, and I got stopped out. I went ahead and claimed that loss, but I may revisit this tomorrow, particularly if it gaps down lower tomorrow. If it gaps down and it's like around 29.80, 29.90, I'll reshort that thing, because then you're getting a similar confirmation like you got here and here and here again. So that's just something to keep in mind, and we'll see how that one does in the coming days. So appreciate you guys listening for about the 12 minutes that this video lasted for. If you guys have any questions, I'm always in the chat room, it seems, at least, but particularly between 8 o'clock and 5 o'clock each day, I'm in the chat room. We got a really cool new feature that's going to be rolling out possibly this weekend. You'll have access to sign up for a preview of SharePlanner Pro. It's the long-awaited trading platform that I've been talking about, and hopefully that can come to fruition. So y'all take care and have a great rest of the evening. God bless.